Good morning, good morning, good morning. Good morning, good afternoon, good evening, wherever you are. Welcome. Hello, hello, hello. Good morning, good morning, good morning, everyone. Let me set up things here for you. Let me bring all the bad boys here. Right, okay, let's have a look on Bitcoin, please. Okay, let's have ping pong. Here we are. Right, cool. Okay, charts are up. Good morning, good morning. You're welcome, guys. Yeah, well, today I was gonna do the market update. Usually I do once or twice every week, right? And because I got some spare time today before I go to work, I said I'm gonna do one. And then a friend of ours here, Mr. Bear, asked me for a previous video recording. And then, the idea came up to me and said, okay, what if I'll do a market update live with all of you guys, and then I can take some questions at the same time. That would be more interesting. So we're gonna do the market update together so you can see me how I put my taking process into the charts, and we can do this together. Morning. About hype. Pantelisas Simakopoulos. Where are you from, buddy? Very no name. Rings bells. Good morning, everyone. Thank you for being here. I'm gonna lower a little bit of music so it's not gonna be any distractions here. I always go with music, always, and it's called ethnic music, right? And most of the times I do not understand the language, so it doesn't distract me. But it's good vibes. Right, okay. I hope you're good. I hope you're doing fine. I hope you feeling positive about the markets, and if not, let's have a look together on the charts, and then we'll take it from here. Right. Good morning, Kalimera. Right, okay, guys, let's have a look. Bitcoin. We marked these levels previously on the previous week, right? And then we've seen the liquidity, and then we saw the bottom liquidity. And my thesis, like the market's gonna move from liquidity to imbalance, and then from imbalance, once it's gonna rebalance the market, then it's gonna go after for another liquidity zone. Okay, so it's playing like a ping pong. It plays from liquidity to liquidity, and if there is any imbalance in between, it will go after it. Okay, this is how the market moves, and it makes sense. Let's go back to the basics very quickly. These kind of markets have been designed and given access to us, to all of us, very easy access. All you need is a phone, an exchange, plenty of exchanges out there. Some of them you need to do KYC, some not. It's very easy for you to access. You just throw money from your credit card or debit card, and now you can trade. Okay, so these markets are designed to have easy access to the majority of the people, so the market can, I'm not going to say steal, but they're going to grab your money. Okay, this is what it is. These markets are designed to grab money from the people. Now, for us, the well room, so to say, if we need to find a way to make sure that the market is going to take some money, but we need to make sure that we're going to take some money from the market as well, and we need to play smart here. Okay, we're going to throw away the gambling strategies and methods, and we're going to go in strategic ways. So the basics are, you need to understand that the market gave that easy access to people to grab what? Money, which is liquidity. Okay, so translate that into liquidity zones or liquidity pools that I mark here. Okay, so when everybody goes into the market and trying to push the market up, so they build liquidity. right? This is entries. So if I represent this is an entry somewhere here, a stop loss is going to be here. And if someone is using a high leverage, liquidation is going to be somewhere here. Okay, the higher the leverage that you're using, the closer the liquidation price is going to be to your entry. So if I go here, let's say for this example, if I enter here and I'm using a 10x, my liquidation, it can be down here. But if I have the same entry and I'm using 20x, my liquidation price is going to be somewhere closer. Okay, if I use the same entry and I have a 50x leverage, then my liquidation is going to be somewhere here. But overall, these areas are liquidity, and the market makers, they're going to go hand these levels. Why? Because it's money to be taken away from users. And now we know that the market makers are going to go after the money. Now what we need to do, we need to wait when they're going to go after these liquidity zones, and then we're going to enter the market after that. That's the strategy, technically. You're waiting when the majority of the people they're going to fall for the trap, they're going to get slaughtered. And then this is when you're going to enter the trade. You're not going to slaughter them. The market makers are going to do that for you. But it's going to give you a good entry. Because once the market makers, let's say it went all the way up, all these people are building buy positions, and then the market comes down and say, hey, I'm going to take these people out because they're abusing the system, they're using high leverage, and they believe they can go to the moon on 20x. No way, that's not going to happen. And then comes down and kicks them out, right? All these buy zones here, they have some stop losses and some liquidations. So what happened? Flush them out, all of them. And after that, it continued to go all the way up. This is when you need to enter after the hunt, because after the hunt, the market will rebalance, and the market makers, they have no more interest to go after these levels. And you're going to be left alone in peace, and you can trade. Okay, so the basic here, the strategy is for you to identify where the liquidity zones are, where the imbalance is going to be, and wait for the hunt. After the hunt, you go in, swim with the whales. Okay, and I used to say another analogy is like when the fishermen, when they go to the wild seas and the open seas, they're going to throw some bait in the water to make sure that the fishes are going to come to the surface. Right, so they throw the bait, it goes in the water. So a lot of fish, they're going to come down. And you are the big fish now. Are you going to go after the big fish on the surface when the fisherman is throwing the bait? No. Okay, you need to wait for the fisherman to throw the nets, take the majority of the fishes, and then when he's going to be busy taking that net out, then you are free as a big fish to take out all the fishes. They're going to be left in the water. Okay, why? Because the fisherman is too busy now on his boat to take care of the fish that he's got on his net, and he's not going to be bothered with you. Okay, this is the trick. So stay away from the traps, and you need to look out for the liquidity zones and imbalances. And I did mark that on the on Discord. I said, guys, this is liquidity. It's going to go after this, right? And once it touched that liquidity, it came down to imbalance, which I did mark the imbalance. It hit the 50% of the imbalance, and I said it's going to go after that liquidity zone again, right? 102. And yesterday, because it was a Sunday, I did say pay attention. Why? Because that was a low, that was a high low, that was a high low, high low. So you had an uptrend, a setting triangle, okay? And Bitcoin was attacking 102. And yesterday I said, be careful, it's a new weekly open. I see that Bitcoin is insisting to target 102. I think it's going to break it. And it broke it. Okay, Asia opened today and pushed the price above 102 and gave us a new all-time high, 105. Okay, so this is where Bitcoin stands today. So far so good. Kalimera, everyone. Does it make sense that the market's going after liquidity and it's going after the imbalance? So it needs to rebalance. Every time that you see big wicks, big candles, big bodies like this, let me mark this area here, right? it's going to go after this level. Let me clear the liquidity to make it nice and clean. Clear that imbalance, and I'll give you a new aspect. Here it is. Do you see that that was a huge, massive imbalance? The market pushed away, and then days later it came back inside that imbalance zone. We do not expect to go all the way down below 50% of that range. So if you mark this range, I mark the range of the lowest part with the next candle wick, okay? And then I do expect to come close to 50%. I do not expect always to go below 50. That may be, it may happen, but it's not the rule, okay? I need to make sure I get close to 50%, and then after that, it's gonna turn around, okay? Same thing with any kind of imbalance, okay? Here, you had a huge, big imbalance. You have a small imbalance here. You can combine with this imbalance as well. So let me make it nice and clean. So you have imbalance on its way up, then you have another imbalance on its way up here. And you see that the market went through. That is like order block breakers, okay? So it went through, it went very aggressive to clear the imbalances. So it went through the imbalance, second imbalance, and was after the liquidity, okay? And then after the liquidity has been grabbed, it started moving sideways, okay? Until it was ready to move into a new move. But every time that it's going for, when it's doing a massive moves to the up, it creates imbalances, it's going to come back for it, okay? Now this is a 90-minute, it's fine. Where do you mark the imbalance? Ideally on daily or 12 hours, okay? So if I use this chart here, we have a very tiny small imbalance left behind, that one here, okay? So I'm going to mark this as imbalance. Here it is, IMB, okay? And I have a middle line as well. Why? Because this is the thesis. Every time I see imbalance, I do not expect to go below the middle line. As far as it stays in the middle line, I'm fine. I know that the market has rebalanced. So if I go to 12 hours, here it is. I have Bitcoin push, broke above 102. This is an imbalance that maybe later in the future is going to come back and take care of it, okay? You have another imbalance here, right? And look at that. You can put a body, you can see that it came close to the 50% and now it's done, it's finished. So that has been rebalanced, okay? And now it's clear, it's gone, okay? And you're going further up. Now this is at 12 hours, okay? I'm not going to bring the indicators yet. I want to make sure you understand how we do horizontals, because I pay attention to horizontal levels, okay? So you can see also on the smaller time frame that the price did correct into the imbalance zone and then carried on, okay? So here it is again. Once again, you created the imbalance, it came down, tapped the imbalance, and then moved on, okay? Very similar to the charts that I printed on the web room. So
hey, Freedom, can I ask just a quick question regarding
yep.
the term imbalance? It's just those large candles or large candle wicks that we would call an imbalance, where the market seems to go further than is just an average move. Is that correct? My understanding?
That's correct. And let me show you, let me give you a little bit of space here. 400, go away. Let's have an empty canvas. So what happened is you have like a candle, okay, and it's moving very aggressively, right? And you have 3 candles, okay? Can I make them a little bit brighter so you can see? This purple sometimes is too dark for you, so let's make them white. So here you have 3 candles, and what we usually call imbalance when the market is shifting very quickly, you measure the first candle highest point to the lowest of the third candle. So I'm going to do this purple. So here it is. So that's number 1, that's number 2, and that's number 3. You measure the distance between the highest of number 1 to the lowest of number 3. And if you have a gap, right? Other people call it fair value gap. It doesn't matter. I have a different description for fair value gaps. When I classify them fair value gaps and what I classify imbalance, in the end of the day, both of them are imbalances. So,
Okay, great.
right,
Thanks.
so you got it now. So if you have a wick, you need to measure the wick as well. So if you have a wick higher, like here, then your imbalance is going to be from that wick high. Okay, so always going to measure the wick as well. Now, why do we use this like concept, so to say? Because all the candles, doesn't matter which time frame I'm using here, I'm going to zoom in here. All the candles between them, they overlap. Okay, so if I take, let me use a pen. So if I take this as number 1, okay, that's number 2, and that's number 3. You see that number 3 overlaps within number 2, and 2 overlaps within number 1. Okay, so all the candles overlap each other, right? There's no gap. Sometimes, this is what happens. Here's the example. Sometimes you have an excessive move, and this is your number 1 candle, this is your number 2, and this is your number 3, and you have a gap from number 1 to number 3. So that is imbalance, including the bodies and the wicks.
So the market moved fast enough for their then they could actually get in their orders. So effectively, they want to come back and they want to fill those orders.
That's correct.
Yep. Okay.
That's
Cool.
correct.
Thank you.
So when the market moves very fast, something happened here. Okay. So let's say big wells, big institutions, market makers, they put a buy order, and they push the market very fast, very aggressively, right? And the market says, okay, you know what? The exchange and the market has to update the price according to the buying pressure. Okay, so a big buying pressure was, pushed here with a big massive orders, so that upset the balance and create a huge move. And when you place a big order, like really with a lot of money, like millions, the exchange would not have enough time to execute the whole thing at once. So if I go in, let's talk about the exchange here. So if I go in and say I need to buy 1,000 Bitcoin, which is loads, right? The exchange does not hold an empty 1,000 tokens just in case if I wanted to buy. The exchange will say, hold on a minute, you need 1,000 Bitcoin to buy. I need to find other members within the same exchange that they're willing to sell. Now, if I find one guy that he wants to sell 1,000 Bitcoin, fine. If I don't, then I need to find multiple members. And altogether, I need to find 1,000 positions for you that you need to buy. And majority of the times, with big orders like this, the exchange has enough time to find equivalent enough around 60%. Okay. Now the big whalers, the big traders, the institutions, they don't care about this. I say, hey, I put an order, you deal with it. It's not my problem. I just gave you an order of, I don't know, 1 million pounds or dollars, whatever that is. The exchange will say, okay, I fill the order for 60%. We have a remaining 40% that we need to execute these orders. So what the market's going to do? The market's going to come down to make sure that it's going to fill the rest of the remaining orders. And at the same time, smart money concept traders, they know this, that the market's going to come back, and they're going to add their own money, including the 40%, and then move to the upside. Does that make sense?
Yeah.
The market makers, they don't want to lose positions, right? The exchanges, they want to make sure that whoever wants to buy and get in, they want to make sure that everybody goes in. Okay, because that's where they're going to make more money. It won't make any sense if they're going to take only half of the people on board. They want all of them. They're greedy. Okay, so they're going to bring the price back. They manipulate the price to come back to the point of interest here, make sure that the remaining 40% the exchange will execute it. So this big guy now has 100% of his position completed. New people are going to come in, retailers or smart money concept traders are going to come in, and they're going to ride, the way up. Okay, and that's why when you have imbalances, because it was created because of huge moves, of huge orders, then the market makers and the institution, they're going to bring this price back to make sure that they're going to fill these orders. Because these big guys, when they usually doing, sport and stuff like that, some of them are going to do market orders. Market orders, it means guarantee entry, but in various prices. And other people, they're going to do limit orders, which means at specific price. They don't want to go in, they don't want to do a discount. They just want to make sure that they get in at a very precise time, but there's no guarantee entry. Okay, maybe you're going to have 50% of it, the remaining, it's not, it's not in their hands. And they have to wait until the exchange or the market's going to turn around and come back to this point of interest to make sure they can execute the remaining of the orders. Someone has his hand up. Daniel, would you like to say something?
Hi, yeah, morning, thanks.
Morning.
I
Hi.
just quickly want to come back to the candles, the fair value inefficiency, inequality, whatever we want to
Yep.
call it, and just make sure I'm reading and understanding it correctly.
Mm-hmm.
If you look at the dailies on BTC specifically now,
Yep.
there are two rather large gaps. However, the one has a red candle next to it, so it's not three green candles, and the other one lower down seems to be a clear representation of what you're explaining, which I think is between.
Can we give me the prices so I can see what you see? Are we talking about these years down in the 80s that we have an imbalance? Because there is an imbalance down here, like that one as such, and there's another imbalance down here. On the date now, we're talking about the daily time frames, guys. So here's imbalance.
Yes.
Here's another
So
imbalance.
that's exactly those ones. So the sort of 70 to 75 mark one seems to be a clear-cut version of what you're explaining. My two questions are, and the one you've already answered, is the second one an imbalance because it has a red candle next to it, which has come down almost 50% of that candle.
Yep.
So does that still qualify as an imbalance? And then secondly, what is the likelihood of the market coming all the way back down to that 70, 75?
Okay, I got you. I hear you. I'll give you a simple explanation, and I'll say to you this: the market will come down to these levels. I cannot guarantee you when it's going to come down to these levels. There is a huge imbalance, right? A majority of the time, it will come down to this imbalance, but there's no guarantee when it's going to come back to this imbalance. Is it going to come down while it's pushing up, or it's going to come down while it's going to be on the bear market? And when, in either case, if it's going to be on the up section, so to say, on the bull market, or after the big crash on the big retracement, it's going to come down to the bear market, you're going to see a bounce. Either way, you're going to see a bounce. So if the market's going to come now and then come down here now, you're going to see a rejection, okay? And later on, if it's going to be bullish, come down to the next imbalance, and then it's going to get a reaction, and then it's going to come down again later, and then you're going to see a reaction. Every time you're going to revisit an imbalance, you're going to see a reaction, okay? Now, there is a high possibility, as it has been demonstrated here, okay, that we found imbalances, but the price is still pushing upwards, okay? So that means more new orders, right, that are pushing the price. So you see that was resistance, and then it flipped it to support. And there was another resistance here, okay? Very, very rough drawing here. So it came down, rejection, it flipped it, okay? So you can see that it flipped two zones, and it has no intention right now to come down to these levels. But these still is, let's say, unfinished business. So it will come down to these levels. I cannot guarantee you if it's going to happen now in 2024, 25, or it's going to happen in 2026 when the whole thing is going to crash and then it's going to come down to the 70s. Let's say that Bitcoin will go to 120 and then it's going to do a big correction. Let's do this kind of scenario. Let's say that if Bitcoin is going to hit 122, and by that time it's going to be, I don't know, maybe next year, okay, and that will be the end of the bull market because of time-wise as well. You know how long the bull market is going to last, and then there's going to be everyone is selling because they're going to believe that Bitcoin is being overvalued. It pushed all the way up so rapidly, it needs to cool off, and then it's going to come down, and then you're going to see the same levels that you marked previously. You're going to see some reactions, and when you marked an imbalance, you're going to see a reaction. It's going to happen. It's going to react to these levels, but you don't know when it's going to revisit them. Okay, and unfortunately for these people, if they bought, let's say, and they haven't been executing all the orders, if they still believe in Bitcoin on this run, they have two options. Either they're going to close, let's say, that limit order if they filled, let's say, 60% and they have the remaining 40%. Then they're going to say, hey, you know what? I'm going to cancel the remaining 40% and I'm going to re-enter higher. That is up to them. Usually they don't do that. Institutions and banks and stuff like that, they don't do that. In Forex especially, they do not change the orders. They usually stick to it. But because there's a high volatility in the crypto space, you may have these issues that Bitcoin is, or any token, not only Bitcoin, that is moving very fast. And because the rest of the market is still pushing, they don't let Bitcoin come down to rebalance and then continue higher. You may get a, sorry, excuse me. A lot of people do believe that, once we're going to hit 110, 12 or something, it's going to come and do some good correction. But I don't think it's going to go all the way from 120s or 112s or 100s all the way down to 75 at once. It's going to be very tough, okay? If you look to the left previously, look what happened, okay? That is kind of imbalance. You have imbalances here, okay? You have an imbalance here. It pushes the market up, goes up, comes down, correct? It's moving sideways. And then all of a sudden comes down later on. And then it pushes to the up and then comes down, and then it comes down and clears these imbalances. That happened in February, and the revisit happened in August, like 6 months down the line, almost 6 months down the line. So you don't know when it's going to come down and clear this imbalance. Can it happen now? Maybe. Can it happen in 6 months? Maybe. Can it happen on the way down after the the top of the bull market? For sure. For sure, it's going to revisit these levels. It's going to be beneficial for that little guy that he put an order here, so to say, right? He put an order here, 68, 70, so to say. So he put an order 68. It goes very fast up. He has remaining orders unfilled. And already now the price is 120, and he's like, "Oh shit, bugger! I have half of my money in there. What I'm going to do?" Well, for him, it's a bit too late. Okay, I don't think it's going to. When the market's going to come down to 68 or 67, it will be after the market top, so it will be not beneficial to him to wait to fill the remaining of the orders, because the market may react, may give a little bit push because of the remaining orders, but after that it's on the downtrend. So he's going to be in the negative if he's going to wait so long. That's not a very good strategy. If you think that you're flipping levels, then you need to scale in. Okay, take the remaining 40% and do a DCA in and try to find an average and make sure that you ride. Because if you wait a year later to come back and expect that, oh, the price is coming down to 68, I'm happy now because my order is going to be filled 100%. Yeah, but you're on a downtrend, buddy. you won't have happy days after that. You know, you're going to be happy with that your order's been executed 100%, but the market's crashing. And you're going down heavily now because that was only 60%. Now 100%, and you're going down heavily. So you need to be, you know, you need to be quick with your decisions, right? As a trader, as a person. The institutions and BlackRock and Silvergray and whoever that is, they don't care because they have trillions behind the backs, right? You don't have trillions. I don't have trillions. I don't have billions, never millions, maybe thousands, but I don't have that kind of money. They can DCA very easily, right? Because they don't go heavily in. They're going to put 1 million here. They can put another million there. They can put another million there. They can put another million there. They're always DCA in. They're always DCA in, right? And when it comes lower, they're going to put 10 million in. And then when it goes lower, they're going to put 20 million in. They're going to DCA heavily on lower prices. And when the next cycle is going to go up, guess what? They're going to still add money. And they're accumulating. This is what they do. They throw money into the market non-stop. Doesn't matter which direction it goes. They just go throw money. When it goes lower, this is where they go heavy. The lower it goes, the more they add. Why? Because when it's going to turn around, that is going to bring them more value, right? On the way down, 1 million is going to be a small amount of money. And then you're going to put 5 million. And then you're going to put 10. And then you're going to put 20. And then you're going to put 30. That 30 will cover all the losses of these DCAs very easily once it's going to break out. And they're going to make a ton of money because they're going to DCA on this one. They're going to put another, you know, as higher it goes, they're going to minimize the entries. They're going to go 20 again, then it goes higher. They're going to put a 10 there, and it goes higher. It's going to go 5. It goes up here, it goes 1. When they think this is approaching the top, they're not silly to buy heavy on the top, right? These are smart guys. They know the markets, and they're not going to buy whole thing, you know, at once at the very top. So on its way down, they're going to do the same thing. The lower it goes, the higher the entries are going to have. And because everybody knows, and you should know this as well, that the market is a random walk. It can go in either direction at any given time. They don't need excuses. They can create news for you. They are so powerful, right? They can create news. Hey, just throw a bomb over there. Okay, we have a new war going over there. And then people go, oh shit, the market's going to crash. They create excuses. They don't wait for the excuses, right? They can create news for us. They don't care. So market is a random walk. It can go up, it can go down. And that's why I break things in horizontal level. So let me go back down to 90 minutes. And this is why, guys, I break things down into horizontal levels, because I need to go level by level, okay? And what these lines represent? Well, what it happens, what it turns out to be is like a visual aid for my brain and my eyes to understand that I need to watch up this level. If I lose this level, then something's going wrong. If I claim this level, then I'm good. I'm claiming it goes higher. If I lose this level, then my eyes can see very easily and very quickly, right, that something's going wrong. Like here, okay? Let's have a look at this. Claims, goes higher, all good, comes here, rejection. Every line that you're going to meet, you need to have this thesis. Every time that the price is going to, let me do a price action here. So it goes up, right? Every line you're going to meet, you need to treat it as a rejection point. Always, you can expect that line is going to reject your price. That's the safest way for you to see it, okay? And you're waiting for like events to prove to you. So you will need evidence that the price is strong enough to break through the resistance, the rejection point, and turn this to another rejection to support. You need to see a support, okay? You come up, how are you going to see this level? As a rejection point, as a resistance, okay? Until you get evidence that is flipping to support. That's okay. Now I've got evidence we are flipping to support, right? Otherwise, if you see that it's losing it, it's okay. This is not support anymore. It fell to hold the level. And now you see another rejection point. So that did not turn to support. So it did not manage to flip it. And not only that, we have another rejection as a resistance. The price is going for a correction. And you're gonna see this very quickly when you have these horizontal levels. And this is what you have here. You have the price pushing up, trying to get this to support. It failed. Push one more time, came down here, kind of. Still violated. You see all these wicks? Still violated, coming down. Not strong move. Then it comes up, rejection. Comes all the way down here, support. That line did not act as support at all whatsoever. But this line did. Support, 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 and then moved again. Broke this level, attacked this level again, and then fell. But this time, at least, on the second round, finally acted as a support. Here it failed, but this time, it held it. And you're like, okay, rejection, come here, rejection as support. Pushing, rejection, comes down again, right? Push one more time, comes down, support. It flipped. That was resistance. That is support now. And this is where you're going to build your position when you see a flip. Is it a magical line? No, it's not a magical line. That line is just an aid for your brain to see the levels. Because once you see the levels, then you can make actions. If you don't have horizontal levels, nothing wrong with the trend lines. But let me do a trend line. Let me hide this. Hide. And then you have a trend line. Okay, here's your trend line. So when are you going to enter? Right? If you don't have horizontals, where are you going to enter in? You're going to always enter in, right? When the price is going to hit that trend line, and you're going to treat this trend line as what? As a rejection point. Okay? So if the price is going to come from above to a line, doesn't matter if it's horizontal or diagonal, you're going to treat it as rejection point. So it's coming from above, so you can expect this to act as a support. And this is the only way, the only area you're going to be interested. After that, kiss it goodnight. You have no levels. You're going to wait until when and if the price is going to come back to that trend line. So trend lines are not bad. It's okay. It's cool. But you cannot monitor the progress. You're only going to wait until when and if the price is going to come back to that trend line. And every time that the price is going to hit that trend line, you're going to see it as a rejection point. In this case, because the price is going to be above the trend line, you're going to treat it as a support. If the chart was reversed, the other way around, so if the price was coming up to that trend line, you're going to treat this as a rejection, as resistance. And then it's going to come back, and then it's going to push up, and then it's going to fail. Okay, and then you're going to have the double top, and then it's going to come down. So you're going to treat this as a rejection point, as a resistance, if the price is below the trend line. If the price is going to be above the trend line, you're going to treat this trend line as support. Okay, that's another trick for you to understand how to act with a price action according to a line. Now, if I bring my horizontal lines back, so let me bring back my horizontals. Here they are. So now I can progress level by level, and I don't need to wait for the trend line. So if I still, let's pretend that I still have that trend line, and you can compare roughly. We can compare. I mean, let's give it a little bit of help here to my people here with the trend line. So here's your trend line. Okay, here's your trend line, and you're going to take action only when you hit the trend line. I take action every time I break my levels. That was a rejection, that was a rejection, that was a rejection, that was a flip. That's my entry. And I'm going forward. You need to wait for the trend line. I build my position because I flipped this resistance. I was expecting to get a rejection. It did not. It got rejected a level higher, and then it came back, and now is acting as a support. You still waiting for the price to come down here. And then the price may come up here, find another support, and I'm going to build, and you're going to be still waiting. So that's the difference between diagonal trend lines with horizontals. I can see the progress. I can see my support and resistance and horizontal, and then I can take action on every line. Where in the sniper club, nothing wrong with the people, our family as well, all my buddies over there, Bruce, Simon, Dylan, everyone over there. It just happened that I stay in the one room. So in the sniper club, they're doing trend lines. Okay, so they're waiting for these trend lines and the Fibonacci golden zones. Fine, no problem. But I take action multiple times before them. Why? Because I got the horizontals. Right, Mr. Bear, G Bear. I see your hand up.
Just in regarding to the gangster levels, I've in the last one in your last stream I learned about it, and I've been applying it. I just want to know, like, I've applied it to like a longer time frame, so like over a month or a weekly. I've looked for the highest high and lowest low. And then what I've done is I've kind of zoomed into, like, say now we're on a Monday, I might take the weekly close from last week and then draw another fib within that periodic span to get closer ideas of the levels. Am I overcomplicating it, or is it fine to work in that kind of manner? I see it's similar like you've done over here.
Oh, okay. Now, it's a good question. Now, when you try to combine two time frames or three time frames with the same technique, like the gangster fib, and then you say, I'm going to use the monthly and I'm going to use a swing high, swing low. And then because we're going into a Monday, so this is a new weekly open. So let's use at the same time, once I mark the monthly, let's go and mark the weekly open, or the previous week at least. So I get lines. Then you're going to have lines overlapping with each other, and then you may get a little bit confused. Okay, so what I tend to do to make the charts look nice and clean, and also help the brain as well, because when you have multiple lines going all together, and then you don't know which line it is from which time frame, and you're like, oh, is that 50% which time frame it is? And then you always got to be another question, and then you're going to be messed up with the lines. So let me bring another chart, another Bitcoin with no lines at all. Okay, so you need to choose a time frame according to your style, like trading style. Are you going to be a day trader, or are you going to be a swing trader? Okay, if you're going to be a swing trader, as you said, you choose a higher time frame. Very wise. You can go to monthly, you can go to 2 months. It doesn't matter. So you, excuse me, you can do this in two ways. Either you're going to go on a 2 month, 3 month on Bitcoin, because Bitcoin does have enough data for you to choose a 3 month candle. So you say, can I use this, 3 month candle? You can do. Why? Because it's historical data. You know that Bitcoin, that was the highest point and that was the lowest point. It's a fact. It's not a fiction, right? You know this. You can do this. Or you can say, can I take the last impulse, the lowest point to the highest point, swing low, swing high? You can do this as well. Why? Because it's historical data. Okay, you know that the last impulse started from here and ended there and did a correction, and now it's pushed into another levels, and you need to find where are the next levels in the future. So either way, you need historical data, and I like to stick to one time frame. Okay, so let's pretend we take the swing low, swing high. Okay, sorry about that. I'm gonna mute someone. So I'm gonna mark, okay, the swing low, swing high, okay, and this is a normal 8 levels. Let me expand that to the right, expand that to the left, and then give you the templates. So the original template is for lines, quarters, okay, 0, 25, 50, 75, 100, okay, that's what it is. So what I've done here is I want to say, okay, I'll mark an area, and you can see that it came down and all the borders closed above the 75. It hit the 100, it went for correction, but all the bodies closed above 75, and then it broke through above. And what you can do, you're going to switch the extensions, and I have multiple extensions, right? You go extension 2, extension 3. Now, in this case, it went below, that's not a problem. Go into the style, go reverse, and go above. And now you see that Bitcoin is hitting 103, which is another 50% range. Every red line is the 50% of the range. Okay, so 132 is exactly equivalent distance from 73 to 132. It's exactly the same distance from 73 to 15. Okay, so I stick to this one, a gangster fib. Okay, I'm gonna lock it, and then I can move down to another time frame. That's not a problem. I moved to another time frame. Here it is.
Quick question. How did you lock it in place? Just I didn't see that.
Okay. If you right click to the gangster fib, you get these extra little settings, and you have a padlock.
Ah, there we go. Perfect. Thank you.
Okay, and this is where you find the template as well. You can change the colors.
Yeah,
I've set
them up according to your instructions on your sheet. Thanks. I've got those.
Right. Okay, cool. So even though we used the last impulse on the 3 month, right? Now I'm back down to 12 hours, and I'm trying to investigate and see what the price action is doing with these levels. Does it make sense to you? I mean, is these levels marked out, and does it help with the price action on your chart? If it does, then you keep it as it is, right? And because it's based on historical data, it doesn't matter if let's say my gangster fib, it is not marked on the 3 month previous impulse, swing high, swing low. I did it with 2 years behind. As long as the gangster fib has lines to produce, it's going to be fine. So don't try to compare with mine and say, oh, why Thales is on 110 and mine is on 108? It doesn't matter, right? It really doesn't matter. It's not a point of being wrong here. The key to have a successful gangster fib is to make sure that you understand how you apply it. Are you going to apply it because of the swing high, swing low? Is absolutely correct. Are you going to apply it because of the previous 6 month high low? Is absolutely correct. Do you want to apply it because of the previous weekly high low? That is absolutely correct. It has to do with the person that's going to apply this technique. It has to do with his availability to the charts. If he's a day trader, he has a lot of time, then he can go all the way down to the daily. Why not? Why? Because he has enough time for him to do it. So this is on the previous, was it a 3 month? 3 month time frame, swing high, swing low. Here you have your levels. And what do you see? You see a lot of support here, okay, a lot of resistance, and now you broke it. And you can understand now that you broke this and you need to test this as a support. You want to make sure that you don't fall under this level. Let me bring this gangster fib closer, so because I have the prices up there so I can see it. Let me bring that to 500, please. No, go lower, 350. Can I have 350, please? Here it is. So I want to make sure that I don't lose 103. Okay, I need to make sure that I don't lose 103. 103 now has to be support. And that is a gangster fib on the 3 month swing high, swing low. Now, if you're a day trader and you want to see the daily, fine. I'll clear everything. That's not a problem. Clear everything and go down to the daily. So I'm going to the daily and I said, okay, this is my new day now. New day is still in progress. I need to take the previous day. So break down the previous day because I'm a day trader. Okay. Expand that to the left. Expand that to the right. Reverse it. Go to style. Reverse because you need to be above. Here's your levels based on the previous day. So if I use a template, just for 1 second, if I use a template number 2, what do you see? You need to understand the gangster fib. This is daily high, this is daily low, and this is daily 50%. And because it's very bullish, here's your daily open. The beginning of the body is your daily open. So now you have daily low, daily open, daily 50, daily high. And you see the next day, which is today, first day, okay, you see that it's overlapping. Your price is within the previous day range. So it does make sense for you to break the previous day if you're a day trader and say, okay, I need multiple lines now. I need extra help here. So I need extra lines. So you keep daily high, daily low, daily 50. You just add extra lines into it. And there you have it. Okay? Now go down to 5 minutes, 10 minutes. It doesn't matter. Here are your levels based on the previous day. So that's your previous day high. That's your previous day 50. This is your previous day low, and this is a previous day open. Today open? Where's today open? 2 o'clock this morning, my local time, 2 o'clock. It's the daily open. So let me find 2 o'clock. That's at 2 o'clock. It's a bullish candle. So here's my daily open. And just to make things more interesting, go back to the daily and see if my blue line is at the bottom of the body, which it is. So my daily open is correct. Okay, so let's go back to 10 minutes. And what do you have now? You see now you think you're progressing a little bit, and we go a little bit more advanced. We're going towards what Carl is looking at, what Mo used to look at, right? And Farouk and Jos and Chris, everyone, we're using these. Okay, so you have the previous day, okay, you have the open, the 50%, and now you have the new daily open. And what do you see? You see that the new daily open pushed the price up. It attacked the previous day high. It came down. The daily open acted as a support, attacked one more time the daily high, and comes down and attacking the daily open. As I'm going to see this today, what do I see? I see a high, a low, high, equal lows. I need to see my today's open as support. If I lose this, what is the next target? The next target is going to be Monday 50%. Well, yesterday's 50%. Sunday. And this is how you're going to do the charting. This is how you're going to do your TA. The gangster fib is exactly the same. What changed is down to you guys on which time frame you're going to use it according to the time that you have available to your charts. If you're a day trader, it makes sense for you to mark the daily and the weekly. If you are a swing trader, you're going to go higher. You're going to use the monthly, 2 months, as long as you have data on the chart that you're looking at. If you are an investor, guess what? You're going to look for 3 months, 2 months. Because investors have no interest to get in and get out every day.
Yeah, that makes it so much easier. Thank you. I appreciate that. I understand. Awesome.
Cool, awesome. Now, weekly range. When we usually say, guys, as I said on my on the post yesterday, we're going into the new weekly open, right? So every Monday, we mark the Monday open. So let's go to the Monday open, right? So let's mark the Monday open. Monday 6 o'clock already somewhere here, there. So this is Monday open, and I can mark this as Monday open. Now, because Monday is not over yet, okay, currently I can mark this as Monday high, okay, because that high happened after the Monday open, time-wise. So I can mark this as Monday high for the time being, all right, for the time being, because later, maybe the price will go higher. And after this opening, after that time, after 2 o'clock, where is the lowest point after 2 o'clock? And that is Monday low. Monday low for the time being, right? And that's what you have. Tomorrow, that's going to be Tuesday, you're going to be free and say, okay, Monday range has finished because now we switched to Tuesday. Then you can properly mark the high, the low, the 50%, and the open. All right. Now, according to these lines, I should have, this is a body, and I should have a wick from here to there, and I should have a wick from here to there. So this is my daily candle, right? This is where the current price is. So my daily candle is a very small body with a small wick below with a big wick above. You understand that? We mark the highest, the lowest, the opening, and where the price is right now. So because the price is very close, very thin line to the opening, right? So I have a very minimum body. Very minimum body. This is where my body is. That's where it is. This is a huge wick. So if I turn now into a daily candle or a daily time frame, this is what I need to see to confirm that I understand the chart. Big wick above, small wick below, a tiny body. So let's move to daily time frame. What is your daily candle looking like? Exactly as we explained it. Huge wick above, very tiny body with a small wick below. This is your daily candle. Let me remove all the lines. Here it is. Right? Once you understand the lines that you're marking, now you understand how your daily candle looks like. Big wick above, small wick below with a tiny body. And we mark this on the 10-minute. It's easy. All right? It's very easy. All you have to do is understand when you have the new daily open. Because I am 2 hours ahead of UTC, always the opening of the market is going to be, the open of the daily is going to be on 12 o'clock UTC, Zulu time, or universal time. In the military, we call it the Zulu time. So Zulu time, 2 o'clock is going to be here, right? That's the opening. This is the beginning of the body. And this is the highest level after 2 o'clock. And this is the lowest level after 2 o'clock. And this is where the current price is. And now you understand, this is the huge wick that you have above, a small wick below, and because the price currently is right on the opening, you have a very tiny body. By tomorrow, Tuesday, midnight Zulu time, then you're going to have finalized the Monday high, Monday low, and then you can have the Monday 50%, and you can do the gangster fib based on the Monday candle. Can you show how you chart those lines with the fib? Yep, I'm using the fib tool, and I call it gangster fib because it's a fib tool with not Fibonacci sequence numbers. Can we get a link to rewatch this? Of course you will. I'm going to post it on YouTube, and then you can have the YouTube link, and then it's going to be always there for you. It's not going to disappear, never. Sorry, please say that again. The open of the day is always 0 UTC. That's correct. All right. All the charts are resetting on Zulu time UTC down here. So every midnight Zulu time, okay, or GMT time, which is the Greenwich time, not the London time, the Greenwich. Okay, so UTC 0, any of these time frames, is going to be okay. UTC 0 is the beginning of the new day. And because I am 2 hours ahead, it's going to be always 2 o'clock my local time. Okay, I'm using the Athens time. Let me have a look. Perfect, good. How is the gangster fib different to the using the standard fib? Aha. Right, okay. Well, you see, let me explain this very quickly. Here is the Fibonacci, and these are the numbers. Okay, these these numbers is not a Fibonacci sequence, and that's why it's not a proper Fibonacci retracement tool. Okay, it's been customized, and we call it gangster fib. Let me go have a look, and I haven't missed any questions. The imbalance PVRSA indicator of trading view shows very well. Okay, fine. I don't trust the indicators, to be honest, but fine. There are times the market ignores the imbalance. Yeah, sometimes it does. It does. I mean, that is because sometimes the market cannot, um, it does not let the new traders or other traders, they're pushing the market up and they don't let the market come down to imbalance, but it will come back to that imbalance later or sooner. And Kalimera is Greek word for good morning. It is. Kalimera is good morning. So yeah, I'm reading all the charts, so I'll make sure that I don't miss anything here. The question remains, when will you enter, for example? Okay. The standard Fibonacci is always, yeah, I mean, some of the standard Fibonacci, you're going to have the 0 and 1, that's for sure. And also you're going to have the 0.5. 0.5 is not part of the Fibonacci sequence, but they use it, it's there, okay? But the remaining, I changed the numbers, okay? And if you go to the Google Sheet that I share freely, let me find it for you. Can I have the Google Sheet, please, for my little friends here? Beep, 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 beep. Google Drive. There it is. I think someone showed it before I had that, so but I'm gonna do it again. So I'm gonna bring that here for you so you can see it. And I see a lot of people already signed in. So copy link. I'm gonna give it to you. Here it is. Here's a link, right? And this is a Google Sheet that I've designed to help you guys. Okay. This is the let's say a journal that I've made here. This is not a real trade, okay? This is examples that I made, but you're more than happy to use it. And how you're going to use it? Go to File, make a copy, and then you're going to have a copy on your own, and then delete all the stuff here, okay? The formulas are protected, so you're going to be fine. I was just demonstrating how to use it. It's very easily, very basic, but it's going to give you a good help, okay? Now, if you go to the third tab, here it is, the gangster fib and all the values on the left, right? You can copy paste, and here I have the templates. Template number 2, template number 4, which values I'm using, template 8, which values I'm using, extension 1, which values I'm using, extension 2, extension 3. All the values are in percentages. Here are percentages. Here's the values in numeric order, how you need to put it into your tool. And this screenshot has all the values. So this is the maximum template with all the values in, which is extension 3. And you can see that extension 3 has all the values. The lower you go, it has less lines. Right? We'll keep it nice and simple. So that Google Sheet is free for you to have it and for you to use it. I have some videos how to, we explained previously how to do the journal, what is your target. It's very important for you to know your target, the gangster fib, the risk calculator, how much you need to risk, how much is your DCAs and stuff like that. DCAs over here, how much you need to DCA, stuff like that. Win rate, how important it is. Recovery, we all know this, how much you need to make up compounds. And the most interesting one, the one before the last one, is the charts, okay? So instead of me printing the charts into the chiller chart, and then because the chart detects it on fire and goes away, people miss it. So instead of looking through Discord, where did I post my charts, what I've done, I created this sheet here, and what you can do is just click to any link here, right? And then it will open exactly the chart that I've drawn the lines. And this is the example that we spoke today, right? Sunday high, Sunday low, and the opening on Monday, stuff like that. Sorry, this is Monday daily lines. We did this today now, and it's already been updated, okay? So it means anything I do on my chart, you're going to be able to see it. All you have to do is go to the Google Sheet and click on, let me get the, go to the Google Sheet, and then you can click to any token you're interested, okay? All the tokens that I have here. You want to see AVAX, you click AVAX and you open AVAX. Now, if you want to take that chart with these lines, you have an option on the top right as make a copy, right? And you can take that with you. It goes to your charts, okay? It's not going to be automatically updated, but at least you're going to have the lines and you can play with it, okay? And this is what I do with the Google Sheet anyway. It's all yours. Have fun with it, okay? Right, let's go back to the charts. So, you see, we're breaking the Monday open and we go a little bit below. So now, right now, it's targeting the Monday low. And if I mark as well the previous day, which is Sunday, let's do the previous candle as well, very quickly. Top to bottom, doesn't matter which way you're going to draw it. Bottom to bottom, top to bottom, bottom to top, it doesn't matter. Why? Because all these lines have equal distance between them. So it doesn't matter which way you're going to do it. Okay. There it is. You're going to break these and you can use a template of 2, the small one, because you need to mark the high, the low, and the 50% of the previous day. Go down to 11 minutes. And now you have these extra lines. You are below Sunday high. Okay. You are attacking the Monday open. So if you're going to lose this, then your next target is going to be the Sunday 50%, right? You're going to target the Monday low, and if it goes lower, automatically it's going to create a new Monday low. But obviously you're going to target the Sunday 50%, and then if we bounce from here, then you're going to know that it's going to target the Monday open and possibly the Sunday high. And if it goes above Sunday high, then you know you're going to target the Monday high until it creates a new Monday high. If it finds resistance, then your next target is going to be your Sunday high. And if it holds it, it turns around, then you're going to target again the Monday high. And you go level by level, right? You just go level by level. You do not try to guess. There's no guesswork here, okay? You don't try to guess. What you need to understand, even a smaller time frame, you have liquidity up here. A big, massive sell-off. Abundant wick. Look at that huge wick. It's an abundant wick. Everybody sold it, okay? And you're looking for imbalances, right? Comes up, comes down, targets the imbalance, and then it's smooshing up, okay? And what do you have down here? Liquidity. So it makes sense that it wants to target the 50% because there's liquidity below it. So you may have come here a little bit, come down, rejection of the 50, maybe come down to clear all this liquidity, and then maybe it's going to turn around and do something like this. And if you understand liquidity imbalances and liquidity, and then you know which way it's going to target, you know that the market is going to go after liquidity to liquidity. Okay. If you go to, okay, where is it? Where is it? We've done this, haven't we? How to use a Google Sheet on the previous sessions. Right, okay. I'm going to find the link later and I'm going to post it for you. I'll see if I can do a section only for how to use a Google Sheet. Maybe I'll do that as a demonstration educational one. Right, okay, so we spoke about the gangster fib, how to use it according to your style, okay? There's no right and wrong way of you using the gangster fib, okay? Just to make it nice and clear for you. So let's bring the index back, save, because this is BTC public. And now, how did I draw this gangster fib? Zoom out a little bit, and then you...
Have you called in sick or like what you're doing today?
Yeah, it is recording. It is recording and it's going to be up there. Right, so here is the gangster fib based on the previous top, right? Back in 2021. So that is the previous cycle
One
top,
second.
and this is the previous cycle bottom. Okay. So what I've done here is I use the bear market cycle, so to say, right? The top of the bear market, the bottom of the bear market. So I broke these levels. And then I use extensions. Once it passed the 68, I use the extensions. Okay. Now you see I have another gangster fib in here. What happened here? Let me delete this for you. Right? This is the levels. Now I use these with a big huge time frame. And a lot of people say, okay, how do you break this in the in-between? What do you do for the in-between? Will you start draw a weekly within these lines? And this is a question I was trying to answer to Bear, that if you do another gangster fib according to a different time frame, then you're going to have multiple lines all mixed up. Instead of this, I still keep my big gangster fib. And what I do, I redraw between the two zones. All I have to make sure is these numbers are matching with each other. Okay, so 109 has to match with this number. So I'll make sure 109, 140.73, that's the top, matching. Okay, and I need to match the bottom one, 102, 450.23. And now I have my new gangster fib match exactly in between these two zones. So technically what I'm doing, I'm breaking down these zones with a new gangster fib. This is more cleaner and more appropriate. So use any template you like. Here it is, number 8, and you broke all the levels. Okay, and what do you see? You see that you had a big rejection of the 50% between these two zones. Okay, and here you have it. You have a gangster fib within another gangster fib. All you have to make sure that the numbers are matching. 102.40, hold on a minute, that was supposed to be 102, 450.23, wasn't it? 450.23. Am I correct? Do I remember correctly? Yeah, 450.23. Okay, here it is. Perfect. Pitch perfect. Here we are. So now you can break these levels. And if you want to use the same template, or to say the same measurement to cover higher levels, all you have to do is just enable extensions. Go there, extension 2, and you can see now that the rest of the extension is going to be pitch perfect for the one level higher. And if you want to go even higher, you just enable extension 3, and you can see that it's going to be pitch perfect all the way up here. And this is when you have a gangster fib within another gangster fib, nice and clean. And you're using the same sequence as such, okay? And every red line is significant red line. The red line is always significant, which is the 50%, okay? So that's why I marked the 50% always with red. So you know that's going to find some trouble, okay? So again, you're breaking things down into a level that makes sense to your style, okay? You need to. And the lines, they're not magical lines, but the lines are going to be there for aid to help you to see what the market price is going to do. And you don't you don't need to waste time and wait and see if it's going to touch your trend line. Okay, the golden zones, I like them, I trust them on the Fibonacci sequence, but it's a psychological tool. You need to understand this. Golden zones are a psychological tool. Why? Because you're expecting that the majority of the traders out there, they're going to react when they're going to see the price coming back to the golden zone. The golden zone is nothing magic, right? The golden zone is when all the traders pay attention to that specific price level. And they're waiting until the price is going to come back. And then everybody's going to decide, okay, this is golden zone, I'm going in. And then you see the market turning around and you think that the golden zone is magic. No, it's not magic. All it is, it was a psychological area that a lot of people were paying attention to wait patiently until they make in action. And that was it. It's simple as that. I promise you. Right, okay, that's it for Bitcoin. Let's do another token. Which token would you like to have a look at? You're gonna choose. I'm not gonna go for Ondo. Okay, let's go find Ondo. Ondo. Do I have Ondo? I think I do. He's Ondo. Let's have a look. Right, cool. Okay. Yeah, it's been some. Okay, it took the imbalance. Here it is. You see, it came back to that imbalance. I had two imbalances. Here it is. One, it tapped the imbalance and then left. So that imbalance is being taken out, cleared. So the rebalance is here. And then it came down for another imbalance. It tapped at 50% and then it went higher to target that liquidity again. So it makes sense now that after the imbalance, it targets the liquidity. And that's what happened. Liquidity came down and then pushed up again. Nice. Okay, let's have a look. Let's have a look on the...
How do you add the 50% into your rectangle and save it like that?
Oh, easy. Double click. That is only on TradingView, guys. Yeah, not on the exchange. On TradingView, it's giving you a middle line. So you act that middle line as the 50%.
Awesome. Thank you.
You're more than welcome. I trust TradingView that the middle line is going to be on the 50%. I don't want to see, elsewhere. But yeah, no, middle line is 50%. So I use that as a 50%. And always you're going to see the ranges as well. When I mark the ranges, you're going to see always a middle line. Because if you have, when you marked a range, when you have price having a struggle and stay below the 50%, you need to be a little bit cautious and maybe you're going to be bearish. Okay, but when you see price action attacking the 50% and holding above, you can be more bullish about it, and you can see that 50% is acting as support, and then you can attack outside of the range. So 50% is always significant to any drawing that I do. Gangster fib all ranges, 50% is a level that I pay attention. Can level treat the 50% as resistance or support, I need to know. And if it's going to be rejected, then it's weak. If it's going to turn it into support, then it's good. I'm on it, okay? And this is the case here as well. Let me expand that to the right. And you can see that no matter what, no matter how long the token has been traveling on the gangster fib, I do not change my levels. I do not change my starting point, okay? So I took that high, that swing high, with that swing low, and I marked my levels. And when I passed the green line, the swing high, I just enabled extensions. And if Ondo later will pass my line, guess what I'm going to do? I'm going to just enable the extension 3, and then I have more levels to work with. I do not change my levels. Now, it may happen that, let me clear everything. So let's pretend that you came to order today. It's the first time you see it. It's empty canvas like this, and you're like, oh shit, how do I draw this? If I go to 2 months, it has no data. It's like very minimum candles here. Can I use that swing high, swing low? You can do. Be my guest. Okay, this is what I've done as well. If you go to a smaller time frame like daily, what can I use? Well, you can have the same approach. Okay, forget about the swing high, swing low. Let's go to something to more fresh data. Okay, as long as it's got historical data, is good enough. Can I take this swing low with this swing high, and I take this as a correction, a good correction? Okay, that was a very small correction. That is a very small correction, but it's a decent correction. Can I take this? Can I treat this as a fractal swing high, swing low? It still goes. It's not over. That up move is not over. The impulse is not over. But can I treat this as a fraction swing low, swing high? Yes, you can. And here we go. Swing low, swing high. Reverse the style, reversed it, and here you go. Now, all you have to do is go to coordinates because you don't want to drift it, and make sure you expand it to the left as far as you like, and as far as you like to the right as well. Okay, and now you lock it. Make sure that it doesn't drift. So when you lock it, it means when you're trying to pull it, it will not go anywhere. Okay, so it stays there. And now go down to any time frame you like and have a look and see, is these lines, do they make sense to your chart? Will these lines will be any help at all to you? And if you say, yes, it does make sense, then you keep it. And you don't need to change it. You just enable more extensions. And if you want to break these down a little bit, because let's measure these. This distance from here to there is like 8%. Can I trade this in between? Why not? And before I'm going to break this down, I see a huge candle here. What's that? What is this? What do we classify this as? Imbalance, okay? I have a high probability that the market's going to come down to fill this imbalance by 50%. So I do expect Ondo to come down here, lose it a little bit, come down and then reclaim it. Okay, let's have a look. I'm going to keep this on the smaller time frame, 22 minutes. Okay, not a big time frame, 22 minutes. Will it come down all the way down here to clear this imbalance? This is a huge imbalance. Okay, you can see a huge, massive candle. No previous and no pre-candle or post-candle. There's no overlapping between number 1 and number 3. 2 has a big gap, so that's imbalance, right? You're expecting, you understand that you have liquidity up here. So that's my liquidity. Liquidity, there it is. Why is liquidity? Because everyone starts shorting, selling, okay? So if someone's using futures, they're going short with high leverage. And also I have liquidity down here. Okay, so why liquidity? Because everyone was buying here. Buying. And that, it's another buy opportunity. So I have entries here. I have entries here, and I've got entries here. I've got entries there. So where's the stop loss is going to be? Guess what? The stop loss is going to be under that. So I have lots of stop losses here. So what do I have? Liquidity. And if you're using high leverage, guess what? The liquidation price is going to be around here as well. So I have a pool here. So I understand that the market is going to go after imbalance and then after that liquidity. You don't know which one's going to go first. Will it go up here first and then come down to imbalance? Or will it go to imbalance and then come back to liquidity? Or will it come to imbalance and then target the other liquidity and then turn around? You don't know. It's random walk. All you know that you marked the point of interest. I say, hey, I see you, I understand. I see you, I understand. I see you, I understand. And then what are you going to do? Monitor the levels. Do you want to break this level down? Fine. Break this level. Bring the gangster fib and print another gangster fib within the another gangster fib. Just make sure that the lines are matching with the numbers, right? So let me bring this closer, a bit far. Go further, please. Here we are, nice and clean, and use the numbers to match each other. Okay, so it has to be 2.1204, right? You see it changed, and this green line, the bottom one has to match with this one, 19493. Okay, now it's matching, and you broke these levels, two levels. If you don't want 2 levels, just change the template. Go and say, hey, I need only 8, no extensions. Here it is. Where you at? Of the 50%. Okay, so I'm watching this. You violated the 50%. It's trying to reclaim, fine, but you violated. If you violated something, it means that, this has more possibilities that it's going to go lower. There is some imbalance here, a little bit, but it's clear. I'm not going to worry about that. Small liquidity over here. What do you see? High, low, and now you're waiting to see, is this correction finished? Is this correction finished? Or it's going to print a low. If it's going to print, a high, a low, a low, then it's more likely It's going to target the 50% of that imbalance. And this is how you do TA very quickly within minutes on any token. Any token. Let me find another one. Oh, the AVAX. Okay, let's go AVAX. Let me put a title here so you know that is under USD without a dot. Thank you. Here it is. Save it. Now, if you click on the link on the Google Sheet, you're going to see exactly that chart. And if you don't believe me, what I can do, I'll say here, hello, and you're going to see it. Okay. Save. Done. Next, AVAX. Where's AVAX? AVAX. It's here. Let's have a look on AVAX. The reason that I developed this strategy is I wanted to make sure that I can do any chart very quickly. I don't want to spend hours on one chart to see what I'm going to do. I wanted to open the chart and be able to draw the lines immediately within minutes. Okay. Let me expand that to the right. And this is AVAX. Let me zoom out a little bit so you can see why did I draw the lines. Okay. Now you have it. On the very top to the very bottom. Right, and then I have a gangster fib within another gangster fib. Okay, so if I hide this a little bit, that's what you see. Okay, a big major rejection, 78. Okay, what do you see here? Price could not stay above 60. It dropped all the way down. It did not manage to hold support on 26. It fell. I bet this is around 50%, close to, may I? Roughly here to there. Doom, 50%. You see the red line there? So let me go a bit precisely, a little bit there. Use only the template 2, and you can see that it hit the 50%, right? It hit the 50% and then turned around. Okay, it attacked the let's say the next resistance. It fell again one more time, trying to hold the support, a bit weakness, comes down and then flips it. It never turns back. Okay, and now you are within 43 and 60. The distance is too great and you need to break this down. Fine, no problem. Bring a gangster fib from this level to this level, make sure the numbers are matching. Okay, so let's make this number 785, and the bottom one, it needs to be 43,395. Now they're matching, and you can use any time. You can see 50, it cannot stay above 50 for the current time. Okay, for the time being, use the extensions of 8. You're breaking things down, expand that a little bit to the right, give it some space, give that space here, here it is. And go to any time frame you wish. Here it is. Here's your levels. Okay. So you know that in the bigger picture, AVAX is bullish. Okay. But for the time being, as we speak, we are witnessing a correction. So that was the top. It came down. Truce. Trying to push another time. You know, a lower high comes down, give you a low swing. Push one more time, equal highs. Okay, and then comes down. When you see triple and double or double tops or triple tops, how do you translate this? Very easily. Okay, huge liquidity. Okay, this is huge liquidity. It's been rejected 3 times. Okay, what does it mean? It means that a lot of people in AVAX went short. Once again, short. Once again, short. What do you have? Entries, stop losses, liquidation prices on high leverage. So you got 3 times the liquidity up here. So how are you going to treat this? As a major point of interest. You're going to find the support somewhere. You need to find the support and you're going to buy and you're going to target that liquidity because a lot of money is sitting here. And what the market makers want to do, grab that money, take that money out of the people. And what are you going to do? You're going to buy here, let them attack the liquidity, and you're going to take your profits. When the market makers, they're going to take the profits. So liquidity zones are not an area for you to be afraid of. You just need to understand that liquidity is a giant magnet for the market makers. And once you identify them, this is when you want to target. You want to go with the whales and the institutions and the market makers. Don't be the salmon. I used to say that on the old streams. Don't be the salmon. Don't go against the flow. If they want to push up and go for the liquidity, you go after with them. Okay, don't try to go against it. So AVAX, big liquidity up here and also big liquidity down here. Okay, and what do you have in between? Let's go to a little bit higher time frame. What do you have in between here? You have imbalance. Okay, and I expect that to come down all the way down to 50%. Okay, and that's what, you know, this is very rough, very nice draft about AVAX. That's okay. Major liquidity, there's imbalance. Let them come down to fill this imbalance. Okay, so I have plan A that from here maybe it's going to target the liquidity, and I love this because it's triple top. Okay, now if a lot of people are still pushing to go for this liquidity, like these major huge weeks, okay, I understand. Okay, I'll buy more. I'll buy DCA here. If they come down here, I'll DCA here. But when it's going to turn around, I know that my exit is going to be here. And that's why it's very important for you to go in like with low leverage like 3x. Let the AVAX to come as low as possible. First target is going to be the imbalance. If they hold this imbalance and turn around, that's fine. You're going to be 3x, that's your target. If it goes lower, you're going to DCA on the 3x. When it goes above this level, you're going to change it to 5x, right? Goes above the red line, you can do a 10x for the final target. And when you hit that, you just close it, take the profits. If it wants to go even lower, don't panic, just add, because there is liquidity down here. Okay, so speaking of which, let's go to CoinGlass. Come on, let's bring CoinGlass. Liquidation, model number 2, go to symbol, go to AVAX, and use high time frames, go to 1 week. And let's have a look, where is the liquidity? Where is the liquidity? How do you translate this map? You know, what heat map is? It's a heat liquidation leverage, okay? It's a liquidation leverage. So it's telling you there's a big liquidation sitting down at 47.8 on the weekly chart. And huge liquidity up on 55. Let's compare that. Ta-ding! Here's your liquidity. We marked it. We know it. Why do we know it? Because it's triple top. Here it is. Liquidity sitting on the top on the 2 week. Let's go to 1 week and have a look at the bottom. Where is the bottom? 48. 48 is here, the imbalance. So you know that you have liquidity imbalance. So it's going after that imbalance. Go to a smaller time frame. Okay, not very clean, but you see you have loads of liquidity on 54 on the smaller time frame and loads of liquidity down here in 48. Not very bright yellow on the 3-day, but it's fine. I'll use the weekly. I like to see the heavy loads. So 48. And 48 is here, where the imbalance is. So it's going to target that liquidity down here. It's going to come down and clear this imbalance. Now, if it wants to go lower or go higher, I think high probabilities to go higher because a lot of liquidity down here sitting there. A lot of shorts. So the market, what's going to do? The market makers, they're going to go up and do a short squeeze. They're going to squeeze them out. They're going to take their money.
Dale, can I ask you, so basically we using the gangster fib to get a visual representation and help us to assimilate the ranges that the market's moving in.
Yep.
And then when we use things like the heat map in this is just another bit of information that we could use to perhaps make a clearer decision in our trade as to which way the market will go. So if the market maker is coming below here to get that first little bit of closer liquidity, would we actually try trade the range between that point and then the top liquidity? We trade between the liquidities. Is my thinking correct?
Yeah, it is thinking. Your thinking is correct. You're not trading the ranges as such, but very close to. What are you doing? You're looking for the point of interest and say, okay, I got number one, I got number two, and I got number three. So because we are in the bull market, obviously my target is going to be number one, right? But you need to see on which way it's going to bounce from, okay? Where it's going to be at the support level. So you need to enter at the support. But for you to identify which level is going to be the support, the proper support, and then you need to identify where the imbalance is going to be and where the liquidity is going to be. That is another big liquidity. So that can be a support. That can be a support, and that is a support. So you have 1, 2, 3 possible areas of great support. You don't know which one's going to bounce from. You cannot guess. Don't try to start guessing. What you want to do is trying to build positions. And once the market's going to turn around, then you know what is going to be your next target. The lines is a representation for you to take action on which level, either support or either resistance. It's going to be your entry, your stop loss, your TP, or TP is going to be here, or TP is going to be there. This is what the gangster fib is going to help you with the prices, is where to head for your TPs. Now, for me to do these rectangles of liquidity imbalance is me understanding how the market is working. I said I need to mark and find out where liquidity is. And since I found the liquidity, the coin glass, it just kind of helped me a little bit. I do not see the orders. All I see is liquidation prices. It means people that they use high leverage, where the yellow heat map is here. I mean, let me zoom in a little bit here. This yellow represents that a lot of people went long on high leverage. They probably saw these break out of the range, right? They saw the breakout. So everybody was starting buying heavily. And what the market did, it just went against them. So it did a long squeeze here. Okay, they squeezed them out. And after that they took them out, the market turned around and laughed at them. Hey, I'm going up without you. Okay, and this is what happened here. High leverage on short. So that is liquidations. People that they went there, they took that short without stop loss, and that was their liquidation price. And what happened to the market? They saw this downtrend, this top, so they used their stop loss or liquidations, and they went short. And the market was going down into their favor, and it was turning around, and they said, hey, listen, it never passed this level. It's on a downtrend. We're going short. It went a little bit short and then turned around, take them out. It kicked them out from the trades. It kicked them out from the system. It flushed them out, and then the market turned around and laughed at them. They say, hey, I'm going down to your direction without your positions. I took your money. You know, stay in your corner and cry. I'm going down. And that's why you need to understand how the markets are moving. If you understand this, it's going to become more easier. I'm not going to say it's going to be easy peasy, but it's going to become easier once you understand how the markets are moving. And say, okay, now I do not need to rush. All I have to do now is just wait for them to go for the hand, and after the hand, it's going to be a clear scene for me to enter, because they're not going to be bothered with me, because they've done the hand and then they're going to carry on in the same direction.
Is there any particular thing we can look for when we want to define the hunt? Is it going to be like that big wick just over there that's going down to get that liquidity pull. Is that a good indicator?
Sometimes it can be aggressive and go very fast. This is 12 hours, and you can see these happen within a day, right?
Yeah.
It dropped from 54 all the way down to 39 within 24 hours. That is aggressive. You know that they're going for hand, okay? And then when you see them dropping very fast, all you have to do is look to the left and say, okay, where's the point of interest? What are they after? Why are they going so heavily down so fast? And you just need to look for the liquidity. And you're like, aha, I see you. And once you see a huge wick to the up, now you know buying pressure. Why is it reacting like this? Because lots of orders have been ordered here, have been executed for the second round. Remember, 60%, 70% has been filled. The second remaining 40% or 30% is going to be executed here. Now it's holding. Once you see that it's holding support above this line, and you say, okay, it dived in, hit liquidity, all the bodies are closing above this line. This is my support, and I'm buying in. And what do you target? The previous liquidity. And what did it do? It came up here. What happened after that? Dropped. Why? Because everybody was targeting these highs. Okay? The market makers said, this is your entries, this is your previous stops, no problem, I'm after them. A lot of people panicked here, right? And they went short. I promise you, a lot of people went short. The market came up, takes the shorts out, and then goes down without them.
You make the story a lot more clearer when you're looking at it. Thank you for that. I really appreciate it.
You're more than welcome. Trading, for us to hack the trading, we need to make it as simple as possible with very simple tools. You see, I did not use any indicators. I did not use multiple indicator, tools, just one tool. My gangster fib. For me to mark my lines. I mark my lines, now I can monitor the lines. This is this is what I do. I monitor the lines. Are we holding this red line? No, we're not. We're violating. Okay, this is a point of weakness. I see weakness here. It's trying to push up. It did not run, it did not come close. Okay, what is this? This is a low high. Comes down, low low. Okay, 4-point system. Right, this is a reversal. It has no intention right now to target this. It's not the time. Okay, I got a low high, low low, and it's trying to find a support here, maybe, but I have imbalance down here. So I have a high probability that's going to go after the imbalance. After the imbalance, we'll see if it's going to reclaim the levels. If it's going to reclaim from here, fine. I know what the next target is going to be up there. So you're going to trade from here, level 1, level 2, level 3. And I'm going to take my profits on the line. Let me take out the liquidity rectangle. My exit, it will be just a little bit above the 54. Let me bring these lines closer. So my exit is going to be on 54.26. I'm not going to wait to go all the way up to the wick. I'm going to exit here, right? Because each level I treat it as a rejection point, okay? And that will be my rejection point, 54. I know it's going to be big liquidity. I know it's going to target. It may go dive in a little bit, but this is where I'm going to exit. I'm going to exit when the market still goes up. Why is that? Why that is important as well? Remember when we say we buy the reds, we sell the greens, right? Why? Because the exchange needs to find the opposite pair for you. So if the price is going up, what does it mean? A lot of people buying, okay? They're buying the top, fine. What I'm trying to do, I'm trying to exit. So what I'm doing, I'm selling. So I'm selling when everybody buys. So if I put a limit order for exit, I'm selling my position. When everybody buys because the token is going up, the exchange will execute my limit order immediately, within seconds. Why? Because everybody's buying and I'm selling. But if the market starts dropping and then everybody's trying to exit and no one is buying and everyone's trying to sell, guess what? My limit orders will not get executed. And I'm going to be forced to use a market order instead of limit order. And what is the market order? An average. It's trying to execute all my positions to any possible exits, but it still needs to find buyers. But it's not going to give you a guaranteed price. So it's going to tell me, I sold a portion at 56, I sold another portion at 55, and then I sold another portion at 54. And then when you find some support and you find new buyers, then you're going to see that the majority of the tokens is going to be sold on 52, because then it found buyers to buy your positions. And your average is going to be somewhere down here. And you're like, oh shit, I lost all my profit because I was trying to exit up there on 57, but I got out on 52. Why? Because this is where the buyers turned up while I was trying to short. So my strategy is always trying to exit while the token's still printing up. So when and if the AVAX is going to go up, I'm going to get out on 54, because people are going to target that week. I'm going to exit before that. When everybody's still buying, I'm exiting at the price that I want, 54. If the market then coming down, crashing, there's no way for me to guarantee that I'm going to get out on 54. I may get out on 52. And then I lose my profits, don't I? So yeah, always buy the reds, sell the greens. Don't try to sell on the reds, because the exchange will have a hard time to find a position to exchange. Popcat, Zeus. Okay, let's do another one. Have I seen any of? Is this recording going to be available? Yep, I'm going to post it up on YouTube. Okay. You said UTC 0, but not London. Yeah, London is not UTC, right? London has different time zones with the Greenwich. It's not always. They've changed things, don't they? Hold on a minute. This is the summertime is over, so we don't have. What's the time now? GMT now compared to London. Let's have a look. What's wrong with you? What's that? GMT right now, it's 11. So UK. Okay, so the offset of London right now, is it 11 o'clock on London? Let's have a look. It should be. But in some it's not. It's not the same time. London with GMT. So military time zone, Zulu minus Zulu. Yeah, okay. Zulu is UTC. Anyway, GMT, UTC offset, GMT 0 plus 2. This is where I am. So yeah, I assume London right now it should be 11 o'clock. What's the time now? 11. Yeah, 1 o'clock. So it's supposed to be okay now in the winter, but sometimes it's not. Okay, so because in summertime I'm go plus 3. Now it's winter, I go plus 2. So with the Zulu time in UTC. So yeah, it's gonna be fine. Yeah, UTC is better. UTC never change. Okay, same with Greenwich. GMT doesn't change. Okay, so Zulu and GMT is going to be equal, but London does change. A few weeks ago into the same as GMT. That's correct. Okay, good. The end of or the last summer. The last Sunday of October change, and the last Sunday of March is going to go back to the summertime. Right, okay, AVAX is done. We spoke about liquidities, we spoke about the imbalance, is in a downtrend correction, is looking after to take out the imbalance, and then after that, it's got two options. Either it's going to go to the liquidity below or the liquidity above. The liquidity above, it acts more as a magnet, okay? Stronger magnet. What was the other one? Popcat. I saw Popcat. Let's have a look. Popcat. Here it is, Popcat. Let's have a look. Ooh, buy zone. Ta-da! Okay, here it is. Right, okay. So maybe early entries here, buy zones. Why is that? I'm interested in this area because every time that it comes to this area, this is a major flip, okay? That was a major resistance, and now it turned around is to support. And now the question is, are we going to be able to hold it above these levels? Okay. Now that Bitcoin is, let's say, after the all-time high, is trying to recover a little bit. Okay. This is not a point of worry about me. I'm still buying DCA into this, and 3x on this one as well. Don't go heavy on leverage. It's fine. You're going to make a ton of money. It doesn't matter which kind of market it is. Bear market, bull market, you're always going to make money, right? Use simple strategies. Now, PopCat is on a correction. Bigger picture, I mean, look at that. Goes up and up and up and up and up only, okay? So now it's doing a deep correction, okay? The overabuse the system a little bit, okay? Look at that, how choppy that is. Look how nice and easy that is. Nice and clean. Okay, and look how choppy that is. Why is that? Retailers, everyone trying to manipulate this. Okay, and the market is not. They don't tolerate this. So you're trying to manipulate. You're trying to manipulate the system and trying to over leverage. Nah, it's not happening. Okay, there's a big choppiness here because a lot of people are trying to go long. Okay, and what the markets do, going short. They kind of kick them out. Okay. Squeeze them out, squeeze the longs, then after the market's going to clear it, it's going to move. All these people are going to cry that they lost the positions, they lost the money, and Popcorn's going to wave them goodbye. They missed the train. So what do I see here? On the 6 hours, I see a low, right? I see a higher low, and this is a second higher low. I'm like, I see you. But I'm not 100% convinced because this high has not broken. Okay, this high. So that's my last high. That's my last low. Now it's trying to push up, but this high is not as close to this one. So I don't see a reversal yet, but I do see a squeeze. Why do you see a squeeze? Because you see a low, high, low, high, low. So what do you get? Flag. Okay, so if we hold in above this $1, and you see that it's trying to hold above this level, maybe it's going to go a little bit after this liquidity here, right? And then it's going to turn around and then push up. So watch out this space. PopCap may be the next one to move. Okay? I'm trying to keep it as clean as possible, easy as possible. I know trading in I know, excuse me, I know it's not easy. I'm not trying to be overreacting here and trying to tell you it's easy. It's not easy. Okay, especially a small time frame with high leverage is not easy at all. I prefer to use high time frames like 12 hours. Okay, this is what I see, 12 hours. Okay, I mean if I remove the buy zone, this is what I see. Okay, this is a major rejection point, right? That was the previous all-time high. It broke it, and now I want to see that it's holding. Okay, this is what I want to see. I want to see holding, reacted to it. I may understand that it may wants to squeeze this week's out, to clear this week's out. So I may understand that it wants to come down here a little bit, but I would like to see reclaiming $1. And if it reclaims this dollar, and I see that's going to target 119, then I say, okay, it's giving some signs of, possibility that the buys are coming in. Okay, now a little bit of help. Can I use some help? Bring the indicators up on the daily, and have a look. Where is my stochastic RSI? Close to the oversold, not the cross up yet. Okay, I see you. Go to the 12 hours. I see. Interesting. What do I see? I see a low. I see a high low. I see this high. Now I need to see a high high. That is a bullish divergence. Okay? Why is a bullish divergence? Because price is trying to do the opposite. Okay? So if the price is going to give you the opposite, giving you a lower low high while the indicator is trying to give you a high low, that is a bullish divergence. Okay, so I need to pay attention what's going to happen between $1 and 98 cents. I need to watch out these levels. Give me 1 second, guys. I've got a few messages coming through. Right, okay, cool. Yeah, so I'm going to watch out for this pop cut a little bit and see what's going to turn out with the indicators. Okay. I'm not saying that it cannot go all the way down to 98. There is a possibility. I see why. There's a little wicks there. So he wants to rebalance these wicks. But I would like to see him reclaim quickly to $1. Okay. RSI is dropping. Okay. That's another divergence. So we need to see what's going to happen, because you see this going down. Okay. And you see these lows are going higher. Not a very strong one, but even looking on the RSI, okay, you see the lows are getting lower. On the stochastic RSI are getting higher. So there is a divergence going on here. So maybe they're going to come down and flash out a little bit this week's, and then maybe maybe I'll see a reclaim at $1. So keep an eye on this one, okay? Maybe today, maybe tomorrow, maybe we're going to see and turn around. Another thing as well on the delta negative, what do I see here? Right, what do I see here? All the shorts, all the shorting, all the volume is getting lower. You know, it becomes smaller and smaller. Okay, so all these people are trying to sell are running out of power. Okay, they don't have any more money to short, to take out. So all you need now is new candles above to buy. Okay, so pop cut maybe is going to be quick enough for next one. Okay, so I watch out for this area here, 98 cents. Okay, and then turn around and claim the $1. And you can build up your position around $1. Don't try to get your entry exactly here. It's okay, it's fine. You need evidence that it's turning around, right? Don't try to guess where it's going to turn around. We may turn around here, may turn around here, you may turn around 66, right? Solid 50%. You may. Okay, if I want to be interested, I want to see reclaim. So my interest will be above $1, not here. Okay, just to make it clear for you guys. Always be safe. Always have evidence. Okay, this is a correction. You don't know how far it's going to correct. You see a little bit strong going on here. That you get a low, and it's getting higher and higher, which is good, right? But you need to make sure that you stay above 1. If it goes a little bit below, like a small manipulation, let's draw a small manipulation. Maybe it's going to come down, give it a more fake out, and then turn around. Okay, why? Because liquidity. Okay, there's a high possibility for that. But make sure that you see closing above $1. If it stays $1 and then targets 120, you're going to be fine. That will be your early evidence that that's your low. First high low, then it comes down. Then it's going to create the second high low. And remember, even in the war room with Carl, second high low is a point of interest. Carl loves the second high lows. That's where he enters. A tricky entry. Okay. What next? Let's have a look. Can you choose TIA or turbo? Do I have turbo? I think I have turbo. Do I? Yep, I've got turbo. Let's have a look at turbo. Right, zoom out a little bit, always zoom out, go to 12 hours, have a look what's going on. Again, turbo is a very good one. Why? Because it goes higher, right? Deep corrections, but it's going higher. Now again, another correction. Okay, this is a major flip, the 50%, a major flip. That was rejection, resistance, support, another support, pushing up. And now you're looking for another major point of interest. That was big resistance. Okay, that was a small support, resistance, support. Now you're looking for this support. So your buy zone is going to be somewhere around here. But you have these huge wicks. So what do you translate? Imbalance. Okay, so you have big liquidity down here, huge liquidity up there, and you have imbalance here. So maybe it's going to come down here, take the imbalance, and then target the liquidity higher. So that will be the end of the correction, and then carry on. All you have to do is identify where possible liquidity. When you see big wicks is liquidity. That is liquidity down here. Okay, that's liquidity down here. That's liquidity down here. And on a bigger time frame, like 12 hours, you can see that the market turn around here. So the market turn around here. The market turn around here. So what do you have? Entries, entries, entries. Even here you have entries. So where the stop loss is going to be under the previous week. Who's that, entering here? What's going to be the stop loss under that previous week or this area? So you have loads liquidity down here. So you have money here. You have lots of money here. Look at the huge wick. So you know the areas. 1, 2. Do I have any imbalances? Here's the imbalance. It took them out. Another imbalance down here. Okay, that imbalance is done. It's looking for this imbalance. After that, plan A or plan B. Simple as that. And you have the levels for you to monitor. Does that make sense? ETH. Let's have a look at ETH. Okay, let's have a look on ETH. Look at a smaller time frame, 90 minutes. Here it is. TWR, it's just losing it, right? Correction. That was a high. It can now stay above these. It lost the red line when that was a rejection point. That was a support. It lost it. Okay, it flipped it. So since then, you're going short. You're going down until here. You see that it violated, rejected again. You cover them to carry on. Comes down, violated, rejection comes down, and now here that was acting as support. You could close that trade, no problem. What do you see? Range. Okay. What do you see? Range, no problem. Mark the range with a rectangle. So here's your range. Put the 50% line in there, middle line, white, solid line. Here it is. What do you see? All right, even a smaller time frame, go to 45. What do you see? It's losing under the 50%, right? It cannot hold above the 50%. It's losing it. Got out, lost that level. So it's going down, right? It's shorting. And you're looking left. I say, okay, where are the possible targets? Here. Another possible target. Here. Another possible target. Here. All right? I say, okay, I see you. Right? You lost that level, you're targeting this level. You're losing that level, you're targeting the green line. After the green line, the other purple. The other sign. Until it turns around and give you evidence that it's turning around. Go with the flow. If it's going a downtrend, short it. Okay? When next? Well, after the liquidity is done. After the liquidity is done, and after the imbalance is done, then you're going to see possible signs of reversals. When you see reversals, then you say, okay, I'm going with a new trend. So turbo, this is the 0098 possible area of next support. It lost that support. So either it's going to target this one, there's some liquidity down here, there is a possibility that's going to go lower and then turn around. Okay? Until you get evidence. Right, ETH. Let's go to ETH. I have ETH somewhere here. Here's ETH. Right, zoom out a little bit. That's a 3 hour, not bad. Can go to 12 hours as well. That's what you have. Okay. Lost that, lost that level, the green line. It went all the way down to the red line, 50%. Got rejected, pushed up, break above the green line, which is the 100%. Okay, 0, 50, 100. 100 now acted as support and is pushing up. Okay, go to smaller time frame. You were holding this level. It broke above. It did not manage to stay above 4,000. Came down, rejected here, 3933. Push one more time, comes down, another support. So now you say, okay, I see you as a support. That was resistance. Now it's acting as a support. So you have a flip. Possibly. Okay. So you have a small imbalance here. That's imbalance. Look at that. It's trying to attack the 50% of the balance. One is going to do one more time, possibly. Okay. And then maybe it's going to target the liquidity. Where do you have liquidity? Here and here. plan A, plan B. You know the imbalance, you know the liquidity, you have a plan. All you have to do now is monitor the levels. That's why I have these levels to monitor. Will you hold these 3993? If you're going to hold it, then I know you're going to go target higher. I've always used a normal Fibonacci. Okay, the gangster fib, what it is basically. I'm going to do a candle here as a demonstration. Okay, so what I do, I break down the high of the candle or the low of the candle into equal zones. That's what I do. Okay, the original idea came from the Gann box, right? That's why I call it gangster fib. So I was breaking the levels into two zones, if you remember, premium discount, right? Top and bottom with 50%. And then I said, what if I can do in quarters? And I've done the quarters, which is 25%. So this is 0, 25, 50, 75, 100. So I'm breaking down into equal 4 zones, okay? And then when I had price action that each zone was too wide enough, I said, what if, what I'm going to do in between these two zones? Let me do a little pen here, if I can finally get a pen. So what if I want to trade in between these two zones, right? What if the zones are too wide enough, too distant apart from each other? So I said, okay, what if I do 8? So what I've done, I split the quarters into 8s. That's what it is. It's a equal distance always, okay? That's what I've done. And then after that, I monitor. And I said, okay, what if the token that I'm looking is doing a price discovery and it goes to a new levels that have no past record? Then I said, I came up with the extensions. And what the extensions is using exactly the same distance from here to there. So it takes that distance and recreates another one equal. So then I came up with the idea of extension 2. And there you have it. Okay, so these two green lines, the 0 and 100, is exactly the same distance from 100 to 200. And I have another 50%, which is 150. If you start from the beginning, this is 50, that's 100, 150, this is 200. And what if the price action still goes higher and higher? Then I'm using extension 3. I'm using exactly the same distance. I just go to higher levels. Okay, this is the gangster fib. And because I'm using the Fibonacci tool, but not the Fibonacci sequence, I'm using my own sequence, which is the quarters, 25%. And because the original idea, it came from the Gann box, I was using the Gann box. Let me show you the Gann box. Again, Gann box was part of the Fibonacci family. So here's the Gann box. And I was trying to find a tool that can give me 4 lines. And then I opened the Gann box. And I was like, at first I didn't think of Fibonacci because we were using the Fibonacci with the Fibonacci numbers. I said, I don't want to ruin Fibonacci. Let's use the Gann box. I said, okay, this is too complicated. Let's make it more simple. So I go into the options and close all the time, which is the vertical lines. Okay. So I said, no, I need to use the horizontal lines. Okay, so I remove the background, no labels. Well, I can keep the labels, that's fine. And I said, okay, here's 0, here's 25, here's number 5, here's 75, and this is the golden zone. What if I take out the golden zone? And this is the original. I mean, if I go back to template and go to apply defaults, you can see the numbers. 038, which is a golden zone, right? And 618. Well, the 618 is the proper golden zone, but 38 as well is a significant level for the Fibonacci. And all I've done is I took out the Fibonacci numbers. I kept the rest as it is, 0, 25, 5, 25, and 1, as the original Gann box. Remove everything else, remove all the noise. And that's what I was left with. Okay, here it is. Background, everything. 4 lines. And because it was too messy with these different colors, all I did is change the colors to something simple, like gray. I said, okay, that's nice and clean. not so much abstract. I said, okay, I need to know where is my starting lines at least. So I said, okay, what if I change the 0 to green and then my number 1 to green, which is the beginning, right? And I said, okay, it would be good as well to know my 50%. So I said, okay, I'll do that red. And that was the original, my development. That was my original strategy. And then I ran out of lines. I said, okay, what if I need to do in between? I couldn't do the 8s. And I was like, what am I going to do? So I was trying to copy. I said, okay, what if I copy these and then put it up here, and then I copied that and put it up on the top, and then I got my extra levels. But they're not accurate. I have to spend a lot of time. So, you know, that's quite messy. Doesn't look nice. So I said, okay, what if I'm going to use the Fibonacci tool? So I came with the Fibonacci tool, and I said, oh, look how many fields. Look how many lines I can use. And I changed all the numbers to the same sequence. 0, 25, 5, 75, 1. And then the 8s, and the yellow are extensions, and the blue ones, again, the extensions. And every half, 0, 50, right? 150, and 250, it's my red lines. And since then, I'm quite happy. I don't need to do anything else. And I just monitor the levels. I mean, it's nothing magical. Kind of, it is magical, but what I've said before in the previous recordings, I said it's an illusion. Okay, it's not magical, it's an illusion. What happens is helping your eyes and brain to mark out the levels and take action, what price action is doing with these lines. If you lose this line, doesn't matter if it's going to be 3.9 or 3.8 or 3.7 or 4.2. All it matters is for you to maintain the line or lose a line. If you lose a line, sign of weakness. You close it, or you short it, or you change direction. As long as you're claiming the lines, it's good. You lose it, you're going down. That's what it is. Trying to keep everything nice, clean, neat, and practical. And I need to chart any token as easy as possible, as quick as possible. And I'm going to open a new layout. All right, I'm going to use a war room layout, and I'm going to bring another token. I don't know. Give me a token. Give me one token. Random. I'm going to demonstrate one more time. INJ. Fine. Good. INJ. If I can type it in here. INJ. Can I use USD? I prefer USD. Okay. Coinbase. Lovely. No levels. Nothing. Nada. Empty. Empty canvas, right? Nothing. What you do? You go into a higher level. Fine. Daily. What do you see? Okay. You see a little dinosaur? It means for the beginning of the time. There's no data before. So I've got all the data available from Coinbase on INJ. Lovely. What do you see with your own eyes without doing the lines? Ah, okay. This is what you see automatically on your own. Possibly you're going to say, oh, I see another support here, possibly. Okay. But you do that randomly. You do it with your eyes, roughly. But the lines are going to help you. What next? What's going to be next one? Where do you see the next rejection point? It can be somewhere here. Why? Because I see multiple rejections here, there, some violations, then a flip. So I take this, randomly. Fine, you can do that. How accurate it's going to be? I don't know. But what if I go to even bigger time frame, and I'm going to use the previous swings. So swing low, swing high. I'm going to break this. Okay? Historical data. Here it is. That's the lowest point. That's the highest point. Expand that. Here it is. And there's your levels. Now template, nice and clean. Here it is. These are your levels. Are you happy with that? If you're happy with that, fine. Swing low, swing high. Is it accurate? Of course it is accurate. Okay? You don't like it? Use a previous swing. Swing high, swing low. Break this one. It doesn't matter which way you're going to draw it, from bottom to top or top to bottom. All the distance, all the levels are equally distant, so the levels are going to be accurate. So expand that to the left as far as you like. Go to the right. Here it is. Now, do you like that one? Does it make more sense to you? Fine, keep it. Lock it. Go to a smaller time frame, to any time frame you wish to trade, and have a look and see what the price action is doing according to these lines. If it makes sense, and then you understand what to do. You say, hey, listen, it's trying to stay above the 50. It did not manage. It came down. It lost it. It violates that level. It tried to reclaim, but lost it again. Now you have a big distance between this level and this level. Look how big that is, that gap, right? Almost 21%. It's too big. Do you want to break this down? Fine, you can do it. No problem. Break this down from this level to this level. Just make sure that the numbers are aligned, right? 33253, I'm going to play the lotto. 28316, 316, 16, here we are. 6, no 3, here we are. Accurate, okay? And you break this level down as well. Expand that to the left, go to 0. Here you go. Now, you want to use extensions, go lower to break this level as well. Use extensions. Template, extension 2, please. You went above, no problem. Go style, reverse, comes down. And now you have your levels. In any time frame, here it is. How long did it take you to do this? Minutes. And now you have your levels. Now you're going to go with your strategy and say, okay, what do I see? Okay, in general, I see weakness. It's going down, down, down. But at the same time, what do I see? I see that I have a low and high low. Okay, or I don't have the high highs. Okay, so what do you have? Squeeze, a flag, right? So what do you claim? You claim levels, right? You see these low, you see these low, and now you're asking yourself, are we going to get another high low? Right? Technically, you had a range here, right? And you broke out the range. It came inside the range, but not fell under, and you broke above. Now it's retesting the range again. You can see that as well. So here's your range. Okay? So it's coming back to the range. And you're like, okay, are you going to hold above the range or at least 50% of the range? Are you going to hold it? And then maybe we're going to get another push up. Right? For those that they like the trend lines. But you see, all the lows are getting higher and higher. On a smaller time frame, 45 minutes, you've got these highs, high, 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 low, high, low, high, low. What do you get? A possible reversal. A possible reversal. So maybe this correction is done. Okay? Maybe this correction is done. So you're going to go high and high. Right? So you have the levels. All you need to see now for you to be, let's say, because trading has to do with your timing as well. What time do you open the charts and whereabouts you are with the price action? So if the price action right now sits here, you entered here, like you and I right now on this live, we see this low, high, low, high, low. So, okay, I see you. I see high, high, high. Okay. Is this going to be support? I need to make sure that I'm holding above the support. If I'm holding this support, then I'm going to target this level, and then later I'm going to target this level. I know there's liquidity here. And this is how you're going to put your strategy. Okay? Depends of your style as well, what kind of trader you are. Day trader, swing trader, intraday, scalper, it's up to you. But what do you get now? You get INJ that is looking quite bullish. Maybe we are witnessing the end of the correction. Okay? You see some strong signs here. You broke the previous high, you broke out the range. You came into the range, possibly why? There is a high possibility that a lot of people saw the breakout of the range, they put a high leverage and the market came down, not tolerating the high leverage. Squeezed out the longs, right, and then pushed the market up. Okay, it came down, it fell, okay, no problem. It's coming down again. Okay, I see a possibility that it wants to clear this imbalance. I want to see stay above the range or at least 50% of the range. If I lose 50% of the range, then I'm going to target that, I'm going to target that. So you can scalp down, okay? But if you hold it, give me 1 second, guys. So guys, yeah, sorry about that. So yeah, I mean, this is what you need to see. Are we holding above the range? Okay, you're not going to lose big faith. I'm going to hold above the 50% of the range. Still bullish. Okay, that will be again a higher low, right? If it comes all the way down to the bottom of the range, that will be equal low. And we're like, yeah, maybe, right? You're going to be a little bit skeptical. You're going to wait for the right moment. And if it goes and targets the liquidity, that's fine, but you need to see reclaiming the levels, okay? If you see that it's reclaiming, you know, it went for the fake out, clear all the liquidity, came inside the range, and then claim the 50% of the range, then you can enter here and target that level if you're looking for short-term trades. If you're looking for a bigger scale, you know, like a bigger picture, then you say, hey, I'm going to enter here, and then I'm going to target the previous highs all the way up there. And I'm going in with 2x, 3x, and just let it go. Depends on your style, okay? But the levels are there, going to help you with any kind of style. Short-term, long-term, mid-term, swing traders, day traders, scalpers. All you need to do is break the levels down to smaller levels, and you're going to be fine. Right. Okay, guys, I need to go. I'm going to do Pep as well. Yeah, I'm going to post the link later when it's going to be available from Zoom. Then I'm going to post it on YouTube to be archived, and then I'm going to give it to you. Pepe. I'm going to do Pepe as the last one. I don't want to leave anyone out. So Pepe. Here it is, Pepe. Here's Pepe. Right, and yeah, everything. You know, Pepe is a very bullish meme going for on ETH, right? Pepe has paid me a lot of money. Honestly, Pepe has been very, very good with me. I'm happy with Pepe. I start with Pepe. If I do remember, I'm not sure if it was down here with Pepe. Come on, let me give you a little glitch. Come on, go to freedom. Go to freedom. Different layout. And I'll give you Pepe. This is my BNB entry. Okay, that's my entry over there down here. 229. Currently we're sitting at 744. And let me give you Pepe. So let me go to my portfolio. Let's go down to, let's go ascending order. Where's Pepe? Come on, Pepe, where are you? Here it is. Here's Pepe. So let me take out my Gangster Fib. I'm using Gangster Fib everywhere. So yeah, my entry is down here. And Pepe is up roughly 2,000% up. And that is in spot, huh? Don't be curious about that. That is spot position on Pepe. I haven't given up on Pepe yet. So yeah, Pepe is good. It's been paying very well. So closer to this, right. Right, okay. Here it is. So 50% again for Pepe. Okay, and this is the question that you're gonna ask yourself: are we gonna hold this as a support? Okay, yes, this is a high, low, high, low, high, low, high. It's a downtrend. It's a correction. Okay, we are bullish about it because it's still pushing. So we are bullish on Pepe. Okay, This is the correction, and this is the point now that you're asking, are we going to hold these 50%? So far, it's holding quite strongly. Okay, it holds, it holds, it holds, it holds. All you need to now to wait and see if you're going to break above. Okay, so Pepe, this is 90 minutes. It's not too bad as a time frame. That was a huge imbalance. It cleared all the imbalance even further. It went further down the imbalance. So we have lots of liquidity up there. So you have liquidity up here. You have some liquidity up here. So it will make sense that possibly there's a high possibility that we're going to keep this trend. Okay, so we're going to keep this as a support. And then from here, you can build up your positions and start building up again. Okay, first target is going to be the previous all-time high. Otherwise, we're going to enable the extensions. Go to extension 3. And you're going to have higher possibilities, you know, higher levels for you to go on higher levels, because you know that if ETH is going to run, it's going to give you more confidence for Pepper to move. Okay, it's the ETH meme coin, so it will move. Okay, so far it's giving you good signs, right? Push up, correction, support, pushing up, correction. You see, that was a huge rejection. We're expecting to see this a flip. Now we're flipping this level into support, holding this level, and then we're going for new highs. Okay, that's for Pepe. Thank you very much, guys. We've been here almost 2 hours and a half. Well done for you that you lasted that long. I usually do these kind of sessions. Like my sessions are always long running, and a lot of people don't see all the videos. It's fine. You can find the videos on YouTube. I'm going to post a link later on. I mean, if I go to the videos, to the content, you can see all the videos are long hours. Like I've got 1 hour, 2 hours. If I go further back in time, you see I've got 2 hours, I've got another 2 hours, another 2 hours 39. And if I remember myself back to school, I used to do 7 hours, 6 hours straight. Okay. I was doing long marathons. I was doing marathons on my own here. But anyway, you're more than welcome. Now you've seen how I see the charts. You see how I do the lines. You see how I respect the liquidity zones and the fair value gaps, you want to call it, or the imbalances. I understand that the market makers are after these levels. And then I try to enter only when the storm has calmed down, when the hunt is over. I try to enter, find a solid support. This is why I draw the lines. I find my solid support, and then from then I'll build my positions. Okay. Thank you very much for your kind words. You're more than welcome. We're going to do more of these more often, but today again 2 o'clock I have to go, so I've got another 10 minutes. I need to go to my day job. I have another production in the stadium. So I'll see you all soon. Okay, I hope you had a good time. I hope you enjoyed this session. You know how I do my analysis, my TA, how I break down my levels and what my strategies are. We're going to do more often of these. Don't be afraid that no one's going to explain that strategy. I'm always going to be around, and I'll see you soon. Okay, so have a good day. Have a lovely one. Good afternoon, kalispera, in Greek as well. Goodbye, and I'll see you very, very soon. Take care.